Every realtor telling you to wait for rates to drop is giving you advice that expired 6 months ago. I'm going to prove it to you in the next 30 seconds. The rate you actually care about, the one that sets your mortgage payment, isn't going down. It just hit its highest level now since 2010. Not this year, since 2010. And while you've been waiting for a cut, two of the biggest banks in the country quietly started warning about a hike. I'm Amman Rawji, a realtor right here in Langley, BC, and if you're sitting on the sidelines waiting for cheaper money, you need to hear why that money might never show up. Here's the advice you've heard 100 times. The Bank of Canada is cutting. Just wait. Rates will come down. A year ago, that wasn't crazy, but advice has a shelf life. The Bank of Canada has been holding at 2.25% since last October. It's not cutting anymore. And here's what most agents either don't know or won't say. The Bank of Canada was never the number that mattered for your mortgage in the first place. If you take a fixed rate mortgage, and most buyers do, the Bank of Canada rate is not what sets your payment. The bond market does. The 5-year Government of Canada bond, to be exact. That's the real engine. Everyone's been starting at the wrong dashboard, watching the headline rate drop, assuming their mortgage will follow. It won't. It hasn't. That's why your bank's fixed quote has barely moved, even though you keep hearing rates are coming down. So what's the bond actually doing? It just hit its highest level since 2010. Driven by oil, by global conflict, by stuff that has nothing to do with whether you're ready to buy a house in Surrey. Fixed rates are stuck around 4 to 4.6%. And the forecasters who spent 2 years promising cuts, Scotiabank's now floating multiple hikes. TD says the market is pricing one in. The wait for the price drop crowd is waiting for a train that may have already left. Here's the part that should change your mind. Waiting only saves you money if two things stay still: rates and prices. But watch what's happening. Fraser Valley prices just stopped falling. Up 2 months in a row around $899,000. Langley detached ticketed up almost 1% last month. So picture it. You wait 6 months for a cut that doesn't come, and you price out of the house you wanted went up while you waited. You didn't save, you paid for a penalty for waiting, and you called it being careful. So flip the whole strategy. Stop trying to time a rate that the bond market won't let you predict. Get your actual qualifying number from a broker, today's reality. Not a someday fantasy. If your payment works now, buy the house and date the rate. Refinance later if cuts ever come. You can negotiate a rate. You cannot negotiate a price you already let run away from you. And if the payment doesn't work today, good. Now you know, and we build a real plan instead of betting your future on a cut the Bank of Canada isn't promising. I'm not telling you to buy. I'm telling you the reason you're waiting might not be real anymore. The bond market doesn't care about the advice you got last year. If you want to know whether waiting actually helps you or quietly costs you, run the numbers with me. I'm Amman Rawji. My info is linked down below. Get in touch with me. No pressure, no obligation. Send this to the one person you know who keeps saying, "I'll buy when rates drop." Please subscribe and see you in the next one.